Hello and welcome to this video about IndicatorX. So in this video, I kind of wanted to talk about this for a number of reasons now, because it has helped me a lot to protect myself from getting into bad trades. And this works on all the different time frames. But obviously, if you go through the material that's available to you, you'll see all sorts of info, like what time frames you want to use for your high time frame bias and your low time frame entries. In this case, I'm looking at the 4-hour, but sometimes I use the 1-hour because I'm somewhat impatient and I like to take quick trades, and I don't always want to wait around. But it doesn't hurt to use, you should, it's recommended you use the 4-hour if you're going to use like the 5-minute for your entry. But with this, being said, I guess I'll just kind of move on and I'll start talking about some of this stuff about these sweet spots for longs and shorts, and some other things that I've noticed while using this IndicatorX system. So I'm looking at MOG. I'm guessing it's a meme coin. I don't even know. Levicar had posted a link to it, or to a chart on this, and he was looking for a short, or just saying to look out for shorts, because there was the potential for this to become like a Batman pattern, which often plays out, and these can be very profitable reversal trades. But if you're not ready to trade reversals, I would recommend sticking to the system, sticking to using IndicatorX to protect you, and and then using your TDIX to confirm your entries. So, in this case, I'm looking at the 4-hour, and when I look at TDIX on the 4-hour, I'm seeing that the white fast MA is above the middle band. So this is in bullish sentiment territory. So you would only really want to be looking for longs here, if you're going to trade with the trend. You may not get as high of a P&L, but I'll tell you what, you're probably not going to get stopped out as much either if you trade with the trend. If you want to trade reversals, that's up to you, but that's not what the system teaches me, and I can't recommend you looking into that. You can when you're ready for it and you have capital to try, and you're not afraid to have your stop loss hit a few times in a row. Sure, go right ahead. But as for me, I feel more comfortable sticking to this system. It's worked for me, and it's not hard. It's quite easy to use. Now, keep in mind, like if you're looking at the 4-hour time frame, this is kind of a slightly higher time frame that you're looking for your bias on. And when the price is above the 4-hour, it's bullish. When the price kind of goes below the 4-hour line, I'm sorry, the value line, it's bearish underneath. So if it's under here, you're kind of looking for shorts, and it kind of matches on the TDIX fast MA, and you'll see that even though the value line is straight, you see the wave of the money flow, and generally the fast MA will stay under when it's bearish sentiment. In this case, it flipped down here because it did reverse, and that'll happen. But if you're not trying to catch that because you don't want to take on that much risk, if you stick to the system, you're going to be pretty safe, and you can make plenty of money safely if you don't have as much, like I said, to risk. This is a really good way to go, and it will protect you. So if you don't know the basics already, I'll just kind of run over this. There's some things to keep in mind. I'm going to kind of switch to a lower time frame, so I'll have more examples to show you. But like if you're in a downtrend, you're going to see your IndicatorX value lines just stepping down, like stairs going down. And in this case, like they were coming down pretty fast, but then like they slowed down, and then you had one go in the other direction and started going up. So you can kind of see the trend in a way if you look at the lines. But also, what I think is very notable, and it has to be mentioned, is how these value lines, like if you extended it, boy, they can work as like strong support or resistance. And it seems to work that way on all the different time frames. Like in this case, you had a 4-hour value line, and price came up to it and just tanked. It rejected. But the interesting thing was, in this case, if you I'm not saying don't look at the low time frame, but just as an example, if you were having the price way under the value line, and then you had a shark fin, especially super shark fin or two super shark fins, and you took a long here, that would have been a good long. And if you would have taken profit like up here, like right there, you would have been straight. You would have did really well. It would have took a while. It would have been a long trade, a swing trade, but it protects you. If you're taking longs after you see the shark fin when the price is under, and that really is for the low time frame entries, but just as an example I'm showing on here, that's how you protect yourself. And when you keep notice of things like this, like, oh, the price tried to get up above this other value line but couldn't do it, so you're going to see that a lot on the lower time frames. But in this case, I gotta say this. I just gotta say this, okay? In this case, you do have a good reason to short MOG, because like this is a high time frame, and this wick is going to be strong resistance. If you're looking at the 4-hour, this could have been a very valid Batman pattern, but it didn't play out that way. And I'll tell you how you could have avoided getting your stop loss hit if you took this short. And it's kind of simple. First of all, like, you're risking it because like the price is above this recent value line. It's above this one too. And this is really bullish when you see the price bounce off of a value line. That is so bullish. Whenever I see that, there's usually a big move. But not only that, like if you looked on this time frame, the fast MA on TDIX hasn't even crossed back into the Bollinger Bands. Like right around here, you're above it. It looked like it might be ready to cross, but there was no confirmed, cross back in. The shark fin did not close. It still hasn't closed. And when the fast MA gets way high up here, like in 70, up here, like this is like an area of strength. Yeah, it's going to reverse eventually, but it's strong. That thing is bullish. Like if you short here, you could be shorting into these pump candles. This fair value gap got filled and it just kept pumping. Like it can reverse at any time. It's taken liquidity here before it went back down and filled the fair value gap. But because there would have been a gap right here, but this wick took it. So it kind of looks like it might be reversing here, but I'm going to show you it's still too risky. Not only because this hasn't closed into the Bollinger Bands, let alone cross the slow MA. You need the fast MA to cross the slow MA if you want a good confirmation. I mean, you're going to go to a lower time frame for that, but when you look at it, how risky this particular trade would have been on this Batman pattern that failed, because it's not a Batman pattern now. When you look at this on the 5-minute, I'll show you some stuff. Okay, so I was like, why not? I'll take a short, and I took it somewhere around here, somewhere. I think somewhere around, I don't know, somewhere around here. And then it came back up, and I'm like, whoa, it didn't play out. And I was like, what did I do wrong? My stop loss got hit. And I normally don't even take trades that other people post. I tend to have bad results when I do that, and I like to find my own trades. and to teach myself to trade, to find things to trade by myself. And it works really well for me like that. But in this case, I was like, everybody's like following, sometimes like taking some of these trades that Levicar will post, which are great trades, by the way. It's just not something I'm used to taking, is reversal trades. So I was like, why not? I'll give it a shot. I suppose I felt a little FOMO seeing people with great P&Ls. But I got stopped out, and I'll tell you exactly what happened here. So it came up to this line, like where it could have reversed at, but you didn't have, like, it kind of looked like it was going to reject, but it didn't. Not only because the higher time frame, the 4-hour, was bullish, but when you start to see this, when you're up above like some sort of resistance and it's starting to go sideways above resistance, and it's just not coming back down under this big resistance block, which is the 4-hour wick back here. If you scroll back, when you start to see this is a big warning sign, especially like when the price doesn't dip much and then you start getting divergences while the price is going sideways. That's a bad sign. Like it's consolidating right on that, or it's like, here's this line here. Let's check this out. Like it made its own support right here, right below the resistance. This was resistance on a low time frame, and then it found it as support. And then it kind of even moved up some from there. So when you notice something like that, it's like, whoa, that it didn't reject from that resistance. And then the price started inching up and creeping. For people who were in a short like me, like I forget where I entered. No, my stop was somewhere around here. And it started inching. I'm like, oh no, not again. Because I know when the price starts to creep up slowly against me, I know I made a mistake and I shouldn't have taken that trade. And then I started, I'd see wicks on here above this major resistance. I'm like, okay, I screwed this one up because I didn't follow the system. I didn't follow the rules. I did not allow IndicatorX and TDIX to protect me. I FOMO'd and I took a trade I shouldn't have. And so with that being said, oh yeah, let me look at this and I'll show you. Here's a good, I'm looking for another example of what happened, because obviously this found support like above the resistance. It flipped to support, and that was good long entry actually. Really, this here was a valid long entry, but do you really want a long resistance? I wouldn't do that. But here you had the breakout. Let's see volume. Yeah, you even had increased volume when the price went through this, and it was a valid breakout, and then here's your retest. So, and you even had a little increased volume here, which is what you want to see as well. And it's just right there on that line. It's beautiful. It's like, okay, well, I guess I better not short this one today. And there's more to it to show you why. This is just an example. This could be anywhere. Let's see. Oh yeah. Oh, this is the good one. This is what I really wanted to point out. Now, I'm not particularly into trading Trend-X as much. I suppose I'll practice with it and do it more. I've had some wins on it. I've had some losses on it. When I trade narrow pivots, like I don't use Trend-X as my entry. I would obviously use TDIX and IndicatorX as my entry, and I would only take it if, say, if I was going long, I would want to take the long if the price is under the value line and I had some sort of shark fin, preferably a super shark fin. But in this case, you might say, okay, well, there's a Batman pattern here, but if you didn't turn on your Trend-X, you're not going to see this. But it's something you could have seen just by clicking your Trend-X, and it's on the weekly. And you're like, wow, this on the 4-hour, obviously, like I said before, when the price is above the value line, that's bullish. So shorting there is just against the rules of the system. But if you look here, what you're going to see is this super narrow weekly pivot, and price is above it. So that's bullish. And it looks like it had its bull flag, and then it kind of broke out of this narrow weekly. And obviously on the low time frame, you've seen the breakout confirmed with volume, and then like the retest. So trying to short this as thinking that it's going to sweep back down and you're going to get this massive short trade. Maybe you will on something else another day or something, or maybe it'll just go up to this other liquidity line that was up here, and maybe it'll come down here. But I still wouldn't short this, because it took this liquidity and then it started going up again, and this is a super narrow. So there's a good chance that this sucker is wanting to go up to TP2. I mean, we've still got some time in the week. We've got a few days, and this thing it's got momentum. It's got strength. These moving averages are very expanded. This is a show of strength. I would not be shorting this until like you got even a higher time frame confirmation of price going under this 8 SMA, because look at that, it's found support on this moving average. That's beautiful. It's risky to short. It might dump. Bitcoin could dump at any time and bring everything down with it. That it might happen, but when you look at this, it's easily disregarded as a short when you look at the 4-hour value line and the super narrow trend X, which price is above. Yeah, it's a very nice looking Batman pattern until that happened. So it's risky. Now, with that being said, you would want to get let's see here, trade with the sentiment. And you're in this mega bullish sentiment on the 4-hour for your high time frame bias. So you wouldn't want to short this, especially if this hasn't confirmed or crossed back into and closed the shark fin. It's just too risky. But with that being said, because anything could happen as this price is way up above the 70. You could get pump candles going, straight to this other liquidity line way up here. Like that could happen when the price is really strong and the MAs are separated. I would not doubt it if it went up to here or to TP2 or to this other liquidity line or something. I wouldn't doubt it, and then dropped like in a major way. But we'll see how that one plays out. So I wanted to look at IndicatorX in more detail, and just you could probably just trade on this thing alone if you really wanted to, because like obviously the main thing you need to know is if you're going if you're on a low time frame, you are counter trend trading. Once you know your bias, in this case you favor longs, but if the price is way below IndicatorX, you want to long somewhere, especially when you start seeing these big bullish pin bar candles and stuff with the big wicks. Really good sign. Another thing I like to do is I will this is just something I like I like these color candles a lot. You can put the color candles on TDIX, and it helps with your candle color. Sometimes that's really helpful, like because it changes the color of the candles whenever the fast MA crosses the slow MA. And if it's bullish, a bullish crossover, it's going to stay bullish until it turns red again. And from that point on, you can pretty much just look at the candles and say, okay, this is weird, but I've done it and I've succeeded with it. I would say, okay, I've got a green candle here, I'm going to go long. And I did. And, in a case like this before, and I would get, you know, in the profit. And then on my first red candle, I'm like, okay, I'm out. You know, and if you really, since this was such a nice trade right here, for a long, you know, you could have said, well, I'm not even at the value line yet. But sometimes you'll have this occur, like sometimes it won't make it to the value line, and then you'll have your contraction, and then you'll have your new value line form, and then you know you start to have your expansion, and it might not ever reach the other value line. So you'll have that, and you got to kind of watch out for that, because when a new value line forms, that just changes everything. It changes everything. But this is cool here too, because in this case, like if you extended this line a little bit, like if I extended this and I was like, whoa, check that out. The price like rejected and probably had, yeah, in this case, a divergence was clear. Like the price went up, the fast MA went down, and it was clear that it was going to reject on you there. You might have been in a long or something somewhere down here, who knows? And then you said, okay, where do I stop? Well, right here is like another take profit area. And from what I would understand, the IndicatorX value line isn't really that different from kind of like, I guess, a point of control. I don't want to say it's the same, because I don't think it's the same as a point of control in like a fixed range volume profile. But there are similarities, and I actually think the IndicatorX line is better than the point of control line. And I could show you why in some examples if I can find some on here. But you want to watch for stuff like this, price rejecting on value lines, and price obviously finding support on value line. Here's a great one. So it's like price, it was stepping up, and then like once, I see this so often, like price gets above it and comes back down to it, and it's like, nope, I'm not going under that. And then it bounces and it goes up. And in this case, some cases that are like that, maybe not that one, this would probably be a good example. Until the price came up to here, this could have been considered like a naked point of control or something like that. So there was a high probability that price was going to come back to this value line, a very high probability, because until like the price crossed it, it was like a naked point of control. In this case, it crossed it, but yeah, you could extend these, like in this case, like you could extend this line and you it wouldn't go below, and it found support and then went up. And you see that, you know, if you extend these lines, it gets pretty messy. Like I think you can do that somewhere. Yeah, you could extend the current price. Yeah, that's a bit messy. Maybe if I lowered this, but I'm gonna turn that off. But that's something to keep watch for, just with your eyes, I would say. You're gonna see this so much where price is reacting with this line, and that's really, really fascinating to me. I want to try to give you an example, which there, like a classic example, if I can. Something like this would be all right, I guess. So you had your contraction, and then you had your box form, and then your expansion or your whipsaw phase, and then your trend phase. But what like I would think of it too is it's so similar to like a fixed range volume profile. So if like you took your fixed range volume profile tool and then you clicked it and then moved to the other end of the line somewhere, like you'll see like this green line would be your volume area low, and the red one would be your volume area high. And you could have traded this range, like even this whipsaw expansion phase, you could have traded. And by, you know, entering only for longs on the bottom, you would have stayed safe when it broke out. You might have been able to keep riding it. and entering your shorts only at the top. So it's another way to look at it. But check this out. You see your point of controls down here, but the value area or value line is like in the middle. So I see this so much, I'll pull these fixed range volume profiles where there is a value line, and it'll help me to like try to like decide if I want to try to trade that little range. But the point of control is often lopsided. Like it may be down here or up here. But I'll notice that the IndicatorX value line is like almost smack dab in the middle every time, and it's just so much easier that way. So I think, in my opinion, I think IndicatorX is superior in a way to these fixed range volume profiles. Probably, they both have their strengths and weaknesses, but the fact that I don't have to pull it, it's already there already for me. It makes it kind of simple, and they do seem to stick to the middle of the range better than the point of control does. And then plus, like, I guess it's the same thing for point of controls and in the volume profiles. Like they'll act as support and resistance and magnets for price later in price action. So yeah, that's the main gist of this. There's so much more to say. Maybe I'll just save it for another video. But IndicatorX, like it will help you. It will protect you from bad trades, like I showed on that short for the 4 hour. Like that was just too risky for me. Maybe somebody else with the higher risk tolerance and more money would take that trade, like the other right ear for the Batman pattern. But in this case, obviously, it wasn't a good idea. And yeah, that's pretty much it. If you ever have any questions, let me know. And by the way, don't underestimate these liquidity lines, because they're so choice. Yeah, maybe I'll just say that really quick. These liquidity lines they're so great, like for entering trades, and exiting trades as well. You want to use more confluence, but you see this happening. Like once you see these liquidity lines appearing because you've got the setting on IndicatorX, you get your liquidity line, and then like price goes up, takes it, comes back down. Sometimes it doesn't make it, but oftentimes, like, you'll have that over and over. Like price will just go down for it, or go up, and if it's in an uptrend, and the ones below will be left behind, and it'll kind of be like a reason for the price to run down there eventually, maybe, or to go really fast once it starts hitting these, kind of like dominoes falling over. When the price starts to come down, it just kind of just zips through all this liquidity and takes as much as whatever the market makers are going to let it take, or whatever happens in the market from people moving the price. So yeah, that's pretty much it. I'll talk more about these liquidity lines later. They're so great. I wish I would have used those for trading sooner. And sometimes price runs way past them in a trend, but I have entered trades on these, and they've done pretty well. It's not something that's taught like in the system, but it's definitely something that can be traded, and there's so many different ways to trade. So thanks for taking the time to listen to this message, and hope you have a great day today.